understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.
Hey, happy Friday. We are back. Happy Friday. We are back with another episode of the Tech Behind FinTech. Really excited about today's topic. It's really going to be a good one. I love when we start talking about AI and stuff like that. So today's show topic is bank modernization in the age of AI, adapt or collapse. And joining me is Sergio Barbosa, CIO at Global Kinetic and CEO of FutureBank. Sergio, welcome.
Hey, thank you so much. Good to be here, Mandy. Yeah, good to see you.
How are you doing today?
I'm good. I'm getting to the end of the day. I'm in Cape Town, South Africa, so I'm about 6 hours ahead of you, I think. And yeah, it's been a good week so far. Looking forward to the weekend, maybe a glass of wine in a little bit. Who knows?
I love it. I love it. I love when I get an international guest outside of the U.S. and they're in a whole different time zone and we're talking. I know it's pretty much, we've been doing it for like years now, but I never take that for granted that we can communicate in this fashion and in a live fashion. We've never physically met before, and we're going to have a great conversation. So I absolutely love talking with people, to people from different countries, and about exactly technology and tech behind fintech. So without further ado, let me introduce my guest. Like I said before, bank modernization in the age of AI, adapt or collapse. Sergio Barbosa, co-founder and CIO of enterprise software development house Global Kinetic. Sergio also heads up its open banking platform, FutureBank, as CEO, a skilled software engineer, innovative product developer, and keen business strategist. He has participated in several notable milestones, including building the Southern Hemisphere's first digital-only bank way back in 2002. Welcome to the show once again, Sergio. Before we jump in, because I have some questions about that. We are streaming live from Facebook, LinkedIn, YouTube. We have a separate stream going from Instagram. Just need to do that housekeeping. So you built the first digital bank in the Southern Hemisphere all the way back in 2002. Let's talk about that experience.
Yeah, well, I mean, I didn't build it all by myself. I was in a part of the team, that put that together and continue to do to work with the team. To this day, actually, we're kind of like a family that have gone through the evolution of banking and fintech over the last 20-25 years. But yeah, the bank was called 2020 Online Bank. It was the first of its kind digital branchless bank, essentially in the Southern Hemisphere. It was eventually acquired by Standard Chartered around 2004, 2005. But what was really interesting about that time, I mean, this is before the time of smartphones. This was really a pure internet bank, branchless bank that was launched around 2000. And it was of the license of another bank. So this is more a common thing these days where banks or neobanks launch and digital banks launch off the license of a different bank, or fintechs are operating off the license of a different bank and integrating into those bank infrastructures. But in those days, it was really a new thing to have a fintech or a technology company launch a digital bank that was connecting into and using the license of a different bank. So in that process, we learned a lot about the integration space, like integrating into different systems of record inside a bank, the core banking systems where your bank balance lives, the real-time payment processing systems, or the payment processing systems. They weren't real-time in those days. And how do you integrate those systems of record together and then expose them into a channel offering, into the customer proposition? In those days, it was just internet banking, essentially, no mobile banking. But how do you do that? How do you bring these systems together, record together? And so it was really an informative part of my career. I'm a software engineer by trade, so I studied computer science, and getting to work on a project like that was really amazing. And one of the things we also did during that period was really think about the customer and how the customer interacts with the bank and the customer interacts with banking services, putting the customer first. So the idea of agile software delivery, which is kind of mainstream these days, it was quite a new thing in those days. We approached the bank CEO with this idea of building the bank using extreme programming, and most bank CEOs would go, "Nothing extreme is coming near my bank." And him being quite a progressive entrepreneur said, "Well, it sounds like a good idea." Those were really informative from understanding what's possible inside a bank. What are the things that are kind of legacy, difficult to change, difficult to work with, and how do you bring that all to life for a much more engaging customer experience. Off the back of that, we started our software business and our platform business. Going strong. 20 years this year is our anniversary for our professional services business. We've got about 150 engineers based out here in Cape Town, 100 plus engineers based out here in Cape Town, and then we've got offices kind of all over the world, mostly sales types offices, and banks are our customers, so we like working with them and helping them kind of modernize, and with AI arriving on the scene, it's a whole different ball game that they're having to deal with now. So it's an interesting time, especially around modernizing banks.
So there's a few things, right? I'm just going to draw some parallels of my experience. At that time, I was working in a large investment bank. I can mention them. It's years past. I was at JP Morgan at that time, and it's funny that you mention it. So we were doing standard projects, but then this one PM, I guess you could tell he's a VP. You could tell he wants some more excitement. So he took. I was in QA more so, and then I was getting into release management at that time. So it was me, him, a developer. And he did the business. He was also doing the business analyst work also. And we just went in our own corner and worked with the business. And our goal was to deliver every week. So we didn't have a concept of agile at the time. We were calling it that. We were calling it, I forget the name we called it. It was some internal name, but it was fun, right? But you see now, 22 decades later, right? Well, agile came out when people started to use it more in 2011, 10 or so.
Yeah, it started to get mainstream around 2010. You got Scrum and those kind of things getting introduced into the market. Yeah.
So it was interesting back then working on this project because we thought it was so cutting edge and it was fun, and it was so away from the standard SDLC that we were delivering projects. It takes a while. You're going back and forth with the business. You're doing this massive push. And we said, let's do it. So I think you're right. At that time, people were reading more about extreme programming. That's what they were calling it, different things of that nature. So, definitely fun times. When you're, and then also look, I have on my bio, right? Completed billions of dollars of transactions. I didn't do that by myself. I was with these big banks. So you being on the team, you're on the team, man. You launched it. It's all good. Being the first digital bank at that time, right? Because I want to see some nuances of what you see when you launched it. Because I think at that time, ING was coming out, or may have came out, and then they had the internet. They had the cafes, but it was total digital online. What are some of the similarities? Because that's early fintech. What are some of the similarities from launching then that you see now in terms of foundation?
It's with each wave of technology that hits banking, there's always this sort of hype cycle that happens around cloud native, or cloud came into the banking space, or the digital experience, mobile banking, mobile first banking, and then you'd have the existing banks that were trying to absorb this technology wave into their world, and then there were the new entrants into the market that didn't have any legacy that they had to contend with, and they could just kind of leverage the technology to its full effect. So whether it was great customer experience through a digital experience, that maybe the legacy banks would struggle to release, but a new entrant into the market would be able to excel at, or if it was a new bank launching that could leverage the cloud much more effectively than a legacy bank that had a mainframe with a core system that they couldn't lift and shift into the cloud necessarily. I think that the similarities, when you look at AI right now, and talking about AI native banks or banks that are launching into the market, which don't have any of that legacy and can leverage all of this technology, in each one of those waves, the similarities are really that the new entrants into the market can leverage that wave a lot more effectively. So they don't have things that are holding them back necessarily. And I think the same is going to apply for AI, in the same that cloud had an impact and digital first had an impact. And so those are the similarities I would say that you could draw from those times to now. And I think one of the, we still have most banks, well, a lot of banks still are operating COBOL, mainframes inside their core systems. Even though we went through that cloud generation and we went through that digital first generation, there's still branches out there, and banks still have branches. So, I think the similarities are that there will be entrants into the market that really are able to leverage AI for the benefits that it brings to banking and payments. And we will see some really amazing successes around that. And maybe it's not about putting AI into the bank, but bringing the bank into the AI. We're still figuring out what's going to happen there. But essentially, I think the edge that people will, or the thing that people will leverage around AI and banking is its reasoning and its decision-making capabilities. And so if you think about where that can benefit banks, it's around things like fraud decision-making. How do you bring AI into your fraud decision-making to improve your AML processes or your onboarding processes for customers? How do you bring it into your liquidity management inside a bank, or your credit decisioning? So the banks that are able to bring that close to those that reasoning capability that AI brings into the decision-making processes inside a bank will be able to leverage it the best. And that's really hard for a legacy bank to do, because what you need to have in place for you to be able to leverage that reasoning and decision-making is a real-time environment. And the legacy banks don't have that. They don't have the luxury of real-time as much as a new entrant into the market does, because of these legacy systems. So that spans two areas. That spans your balance. So like a bank really needs to understand a real-time position of balances for customer accounts or their own liquidity accounts, and they need real-time payments. So if you have those two things, then you can leverage AI much more effectively in that where it has power, which is decision making. And if you don't have real-time balances and you don't have real-time payments, you will struggle to leverage AI. So I think the similarities are that these technology waves will definitely benefit the entrance into the market much more than the established institutions. And with AI being so powerful, it may be quite a bit of leverage that the new entrants into the market will have over a legacy institution, because of how powerful AI really is. It's it brings a lot more power than potentially cloud brought, for example, or digital first brought. So that's kind of I think about it in terms of similarities from then to now.
You know what? And I think what I like to see, and I think in technology, I like to see patterns, because I think if we understand patterns, we understand how to leverage things for the future. And I love the pattern that you touched upon, right? So if we look back, like, not everyone was fortunate enough, right, to live through that era and still be around working in the same field and understanding, because when you have that type of experience, you're able to start piecing patterns together because you lived it, you experienced it. And the thing that I like that you said was, we see, banks are bogged down by their legacy systems. I mean, we saw it if you look back in 2000 when they were going to the whole Y2K and going through that issue. And they had to bring on people that knew COBOL and these languages, from 30 30 years prior, whatever, right? So we've seen that, but the reason why fintech has taken off so much is because when you're a new entrant, you're not bogged down by that legacy systems. You're not bogged down by the integration. So it's really just about, okay, I'm going to build this. I'm going to leverage the technology we have at present time, right? Then from a bank's perspective, similar to what Standard did with the company, the digital first bank you started, they'll just say, you know what, instead of building this, we're just going to buy it.
We're going to buy it.
Yeah, and then now it comes into the board, right? The Star Trek reference, right? Now we own one more thing, right? And we're going to leverage it. So whether we're talking about an internet first bank in 2002, or whether we're talking about an AI bank right now, or we're talking about a neobank, or we're talking about a fintech that does a particular function very well, conceptually, it's all the same.
Yeah, no, I agree with you. And the companies that are emerging today in that banking space are much more technology companies than there are banking companies, because they're able to, they're able to plug banking into the technology environment as opposed to the reverse of plugging technology into the banking environment. And you're seeing that much more frequently these days, is that, they do, Mark Andreessen says technology or software will eat the world, and most companies are technology companies these days. But so much so in banking, these are tech companies that have banking in them, and that's a big difference.
And two things to that point, right? I think the one bank that I like to reference with that is Capital One, right? Early proponents with AWS. So you start looking at them, are they a bank or they're a technology company that like they're more technology based that leverages banking products than a bank that leverages technology. And then you look at pure technology companies that now are integrating, what's it called? Software banking as a service applications. So now they started 100% technology, but you can get a debit card from them. You can get a credit card. You can move certain your financial products. You can get crypto, but they didn't start that way, right? They're more technology, whether it's a social media company, whether it's a messaging app or whatever. Now they have banking as a service. So, to your point, and Mark Andreessen, right? Software will eat the world. And we're seeing that.
Yeah, definitely. And I think that's good. That's going to continue down that track. So, I mean, the banking services, it's not to say that banking is really simple. It's actually quite hard. The operations within a bank are quite difficult, to manage liquidity, to actually, manage risk, manage all of those aspects to banking aren't trivial. They're really complicated, and you need really good bankers to manage a bank and a bank utility and service. But to what you're saying now is, and your point is that if you have you don't need a huge team to do that. You can do that with quite a small team, and with AI, you can actually help do better decision make. That team can make better decisions around liquidity and positions for the bank and investments, and how they can actually make the bank more profitable at the end of the day, offer better services to their customers, expose the bank to less risk in the way that they offer credit. So all of those things can become a lot more advanced with a smaller team with the help of AI. And then that really becomes a utility that can be plugged into everyday life. So banking and payments can become, like you say, banking as a service. It can be plugged into any part of people's everyday lives, inside your Uber app, inside your music preferences, whatever that may be. Banking and payments is kind of baked into that experience. And that's that whole embedded finance journey where you can start offering credit on demand as you're buying things, etc. But now with AI, it's almost like that's taking another step forward, in the sense that you could have your own personal AI, have banking embedded in it, that it's acting on your behalf and doing transactions and giving you the best deals out there, or kind of making your money work better for you as an individual. So it's both sides of things, and I almost see that as banks become more and more agile and are able to provide their utilities in a much more lean way, they could be embedded inside AIs that people use. So you won't actually be managing your money. You'll have an AI that will be managing your financial position for you in a much more sophisticated way. And so, I think this next wave of modernization, there's a lot that can be leveraged off it internally inside the bank to make banks more lean and more efficient. But then, from a personal perspective or a business, individual or business perspective, to help those businesses and individuals manage their own financial positions a lot more efficiently and less time consuming, I guess.
So, there's a lot of different terms, and I want you to help me understand, the differences. So we have a neobank, we have modernized bank, we have an AI native bank. And even in your case, we can talk about a digital only bank. Can we start breaking down the nuances of each of those?
Yeah, sure. So I think the AI native bank is probably a new buzzword in the market. And what does it really mean? I think there's the jury's still out on what an AI native bank really means. A neobank is a mobile first bank. There are no branches. It's digital only and it's mobile specific. That's the idea of a neobank. And banking as a service being basically an API that you can consume inside your app that has banking capabilities through and through. So it can, to your point, issue a card, it can open a bank account for you, it can offer you lines of credit, and so on and so forth. So you can kind of weave these banking capabilities and payments capabilities into a non-banking journey, either a retail journey or a supply chain journey where you're embedding these financial capabilities inside, say, a travel journey. So if I think about what is an AI native bank, I would think about it in try and draw similarities to what is a cloud native bank and to what you're asking now, what is a digital first, digital only bank. So a cloud native bank is, really leveraging the cloud infrastructure to make the bank much more efficient. So it doesn't have to have this unused servers, this redundancy that they have to manage and built in. They can leverage the cloud to scale on demand at certain times of the month when there's high activity, scale down when there isn't. Reduce their operational teams, the size of their operational teams, create redundancy across different regions if they're multinational. So, that's cloud native. So what is AI native really? It means that, like a cloud native bank, cloud is at the core of it. They're leveraging it to its maximum capability. AI native would mean that AI is really at the core of that bank offering. So all the decision-making process is assisted across how the bank operates is leveraged by AI, because that's really what AI is giving you. It's giving you the ability to reason, and it's kind of giving you enhanced workflow, essentially, if you want to think about it, that with reasoning capabilities and decision-making capabilities. So if it's an AI native bank, you're putting your fraud systems in place that are driven by AI decision-making with human in the loop. So it starts with AI native would mean it starts with an AI process that is managing your fraud and your risk. It starts with an AI process that's choosing which customers you onboard and which ones you don't in terms of KYC and your digital onboarding journey. That for me feels like what an AI native bank is that AI is kind of the first pass of doing things, and then the human in the loop comes into kind of again, it's internally to a bank, it's driving efficiencies, making it a much leaner operational team for a bank than you would traditionally have for the bank. And I don't think it's really your customer interaction could then also be AI first, so it's more driven about offering the customer an AI experience of how, their own personal AI, of how they can, with the trust of the bank, make financial decisions. And the bank kind of helps them set up that trust between themselves, their own personal AI, and the capabilities of the bank. I don't think anybody's there yet. I think people are putting AI in and around an existing bank at the moment, or they're trying to leverage AI in certain areas. But I don't think we've seen the first AI native bank really that's come out into the wild just yet, where every part of the bank starts with AI and then builds around it, And I don't think we've got an example of that just yet in the market. At least I think it's around the corner. I don't think it's far off. I think somebody's probably building one now.
No, so that's interesting because like to your point, right? We've seen this in which we have AI functionality that's being integrated into bank, whether it's KYC, AML, whether it's dealing with reconciliations, whether it's reviewing the market to gauge new opportunities. AI is being leveraged. Now, AI native, in which, it's an interesting concept, everything starts from AI and then goes outward rather than having existing functionality and leveraging AI. Would be interesting to see, because that's a totally so question. You see how in 2002 you had the first digital bank in the Southern Hemisphere that was acquired by Standard Bank, an AI native bank, right? Would the same thing happen? Like some group of startup builds it, and a bigger organization says, we're just going to buy that. But in buying it, do you keep it separate? Do you start when you try to integrate it? You integrated it into your existing stuff as opposed to it being the whole goal.
You end back up in the same place. Yeah.
It makes it more of course a philosophical question, but I'm curious now, like, how does that even work, right? Because the whole point of it being AI native is that it drives everything. It starts in the middle of AI and goes outward. So, for me, right, post COVID happens. I'm inside. People are doing digital banking. I'm not going into a bank. I go to a bank after COVID. I'm not going to name the bank. I was a customer at. And I'm looking. I'm like, where's the teller? And they go, oh no, go to the ATM and press the button, and it's this virtual teller. I'm like, wow, when did this happen, right? So, I was used to going face to face, and some of my banks still have that, but this particular bank, it was and that blew my mind. I was like, oh, the person's not even here, and inside it was a bunch of managers, but they don't they general questions, but anything with your account, anything that if you're going to now get a new line of credit, if you're going to deal with something a little bit more advanced, you need an actual business banker. You deal with them in one of the offices. But anything regarding deposits, balance, I got to put a check in, and you don't use ATM. Anything that you would normally use, walk up to the teller from, you'll just go in the ATM. The screen will pop up. This person's remote somewhere, and they're interacting with you, and anything that they need to get from you, you slide it in the machine. It has a digital copy on there. And then, literally my mind was blown, because the first time I never read about it. I literally experienced it for the first time. And it was like, wow, this is different. So with that said, right, I have this AI native bank that we started. We built it. I'm just curious, how does that work then for a traditional bank? Is it an acquisition and keeping it separate, or is it a situation where the bank will acquire it but say, this is our AI run division? Like, you integrate it?
Yeah, I think you could probably draw analogies to some of the successes of the previous wave, which is these neobanks, like Revolut, and they're not likely going to be acquired anytime soon, because they had so much leverage from being digital only, being as much more nimble, responding to customer demands, being much more international, that they grew so quickly. They kind of gotten away from the option of being bought. I think the bigger the leverage you get from the technology, the likely you'll become a real challenger bank to one of these big institutions that would potentially buy you. And I think with AI, we might see a similar example where you're going to have this really lean tech AI native bank launch that will accelerate so quickly in terms of customer acquisition and value, that it might become prohibitively, it might really just automatically become a challenger to one of the big financial institutions. And I think the reason why that is quite likely is that an AI native bank can leverage a lot more real-time capabilities than a non-AI native bank. So, for example, a thing that makes over the years that I've seen that makes banks, and I mentioned it earlier, that makes banks more nimble, and why core modernization is such a big thing, is the ability to have real-time payments on the one side. So you don't have a long settlement cycle for a payment to actually take effect. You know, like in the States, you have so much of your payments still happen with checks. You know, there's still so much check processing, which is a much longer settlement cycle than real-time payments, which, you know, are happening more and more these days with account to account, etc. So the real-time payment side, and then the real-time positions in terms of balance. So your balances are updated real time. And that's not just for somebody to see their balance. It's like the balances across large corporate accounts, treasury accounts. The more real time your balances are and the more real time your payments are, the more you can do around the bank, the more you can leverage those things. So one of the things that's entering into the market and becoming a lot more mainstream is the adoption of stable coins. And of course, in the crypto space, the concept of, or the capabilities of programmable money. So you've got this tie-in with this regulatory approval around stable coins, gaining traction around the world. This bridge where it can bring that programmable side of money, programmable money with smart contracts and stable coins into this traditional finance world. So if you combine agentic AI and AI native bank with this ability to have programmable money and programmable movement of funds, you're in a completely different set of position of leverage as a startup to build a customer proposition with offerings that a legacy bank can't even dream about. And I think that amount of leverage that you'll get from not just an AI native, but the ability now to be able to in real time create programmable constructs around the money transfer part and that real time capability combined with AI native, that's going to give a startup an immense amount of leverage that I think you're not going to see a startup like that be acquired, but rather become a competitor very quickly. And it will be around partnerships probably more than acquisitions, perhaps. Like, let's play nice with the new challenges.
No, that's interesting, because as we were talking, my mind was like, I was just thinking about that, and like I said, just looking at the pattern. And I think that's a good point that you brought up with certain neobanks like Revolut, in which it became so big so fast that it's like, no, I'm not gonna be acquired by you. I'm not your competitor. Like, we're looking eye to eye. So no, that's a good point. What do you feel are some myths that legacy banks have regarding AI?
Well, I think the one thing is that with, again, drawing on the patterns, but that it's a silver bullet, and that if they bring this AI capability into their world, it's going to magically solve a lot of problems. Much like the cloud, was the silver bullet. You can get rid of your data centers, you can go into the cloud, you can get much more efficiencies out of your operational environment by going to the cloud, and it ended up being more expensive and more complicated. And now you had two data centers. One was physical, one was in the cloud. You still got payloads in your mainframe, and et cetera, et cetera. So I think one of the myths is that it's if you don't adopt it immediately, you're going to be left behind, and that's and it's all over. So I think that's probably the biggest myth, is that it's the silver bullet and it's the next big thing, and it's going to, if you don't catch the wave right now, it's over. There's many successful legacy financial institutions that haven't gone and adopted the cloud 100%, and they're still doing just fine, and they've got really good businesses. And I think it's kind of all about figuring out what, as a financial institution or a bank, you need for your customers, the geographies you're operating in, the products you're offering, it could be a high net worth bank, for high net worth individuals with long positions. And I don't know, it's just depending on what customers you're servicing, where you are in the world, what your regulatory environment is. That's what should kind of drive what your modernization approach should be. And I think the myth that AI, like with previous technology waves, will come and solve everything is probably the biggest myth. But yeah, I think there's good ways in which banks can bring it into their world to maximize its potential. There's 5 main modernization strategies that are out there. There's coexistence, sidecar, progressive account migration, hollowing out your core, and the 5th one I'm trying to remember. It's channel orchestration, basically. And it's about figuring out which one of those 5 strategies, or which parts of those make sense, and using those strategies to help bring new technology into the bank world, whether it's AI or cloud or whatever the case is. So figuring out where it's going to add the most value, which is going to be at the decision-making coalface, wherever it is. If it's a customer making a decision on their next product, or if it's a banker making a decision on a liquidity position, or a decision, a reconciliation decision, bringing it into that space and using one of those strategies to bring it into the existing world. I think that pragmatic approach, not try and boil the ocean, but do it like, piece at a time, and using the strategies that have proven to bring new technology into the bank, just kind of using those to the best of what they offer.
I think one of the best analogies that I've heard regarding AI and businesses, banks, wherever, talking about, a lot of businesses across the board want to adopt AI, where the approach should be where AI is the goal, right? And the approach, AI is a tool. And like we're talking about,
exactly.
We've seen many tools over the last 25 years in this game, right? We've seen all sorts of tools. All sorts of tools at the time seem like, no, that's that tool. Like that's the silver bullet. That's the magic, whatever it is. Over the last, 25 years, we've seen that. Whereas we should have goals, right? What can we make more efficient? Now, obviously, you can leverage use cases in which the tool was implemented successfully, right? Like that's a fair thing to research and leverage. And you can apply those use cases back to your goals and say, you know what? Can we increase customer attrition? Can we increase the adoption of new products? Can we reduce fraud? And we're going to reduce fraud by how much? Do we have targeted numbers and metrics? Okay, can we hit those? Now, what tool can we leverage to do this to get to this goal?
100%. That's the approach that needs to be followed. I agree. And one of the areas they're talking about, hyper personalization around customer experience, and people are expecting that kind of a segment of one. You have this. If you're shipping 1,000 the same product to 1,000 people inside the bank, you're probably already behind in this age of AI. Because there should be a product crafted for you specifically, or for me specifically, of where I am right now, what my financial position is. Do I have a holiday coming up where I need an overdraft facility, or is my son going to college and I need, that product that is offered to a segment of one, that is possible with AI. So that's then saying, how do I use AI as a tool to help me deliver on the goal of what the market is expecting, which is a segment of one, a product, a hyper personalization of the product for a specific customer, like we have with Spotify, Netflix. You open up your profile, and I see the movies I want to watch because it's kind of been learning about what I like and what music I like or what movies I like, and so it's offering me a hyper personalized experience, and that's possible with AI. It should be possible inside banking, and then again, to your point, if that's the goal, is to offer that personalized hyper personalization, AI would be the tool to help you do that. So how can you bring it into your world to help you achieve that goal?
And great, and I love the fact that you brought it up, because let's even dive deeper, right?
Yeah.
Why we want the segment of one is because we want them we want it to be sticky. We want you to use it all the time, whether it's Netflix, whether it's Spotify. Netflix, yeah, I want you to binge watch all weekend on this particular show. That's really what I want. I want you to get so that you lose the 48 hours of your weekend watching this show, the whole season or seasons, in one shot. That's what I want, right? So what is that thing I want in banking, right? Like, what's that thing?
Yeah.
And then from there, right, that's how you start saying, okay, the segment of one, hyper-personalization, will get you that thing. Oh, okay, what tool can I use for hyper-personalization? Oh, it's different models we can leverage. We can leverage AI. So I just think, like, from an industry standpoint, so I'm reading, I'm watching different things, and I just don't think I don't think the majority's thinking about it in that respect. I think it's like,
I agree.
You have AI. My contemporary has AI. Dude, we talk to your CTO. We have to get AI. I'm like, stat. And it's like, okay, like, sure. Like, even with I was watching an old colleague of mine from back then. He's huge in agentic AI. Shout out to Ed Donner. And I was watching a video, and him and his partner, they were describing it, learning it. And you start saying, oh, this is so cool, right? But when you just try to get the tool in, it can get very expensive if you get caught up in a loop with the agentic AI. It's just going back and forth doing these transactions, and the costs are running up because you don't know how to control it. You don't have guardrails around it because you just wanted the tool in, and you didn't really structure it to say, okay, what are we trying to achieve here? So all these things sound great, 100%. But they're leveraging resources, right? All these things are leveraging resources. And me and my security background, also, like, how is stuff secure? So it's things I just think we need to kind of think about, before we just start grabbing stuff and implementing it.
Yeah, definitely. And the same thing happened with the cloud. It was like, let's shift all our payloads to the cloud, and that ended up being more expensive than it was meant to be. So it's the same thing, and
And it's interesting. How many times have you seen at that time when everybody was going to the cloud, where they moved back?
Yeah, a lot of, and because for their purpose, it was actually better to be in a day. I mean, from a regulatory compliance perspective, we've helped launch a neobank in Saudi Arabia, and everything from a data perspective has to live in the Kingdom of Saudi Arabia. The data can't leave in and out, so that cloud environment is something that is not that easy to leverage in an environment. So there's regulatory impact. There's all sorts of things that might say you actually need to run in a physical data center, not in AWS or Azure or whatever. But speaking about data, that's a key dependency on leveraging AI, and one thing that traditional financial institutions may struggle with if they want to adopt it. A traditional financial institution has quite a fragmented data ecosystem. The payments or the card system lives here, the core banking system lives here, the customer information is split out sometimes across multiple systems, and traditional financial institutions are working, or banks in general are working very hard to have a data strategy that brings all of their data into one place, because you need data to train models to be able to give you to leverage the AI if you want to use your internal data. And if that data is siloed or fragmented across your organization, you're already you're kind of on the back foot. You need to solve that problem first before you can actually leverage the AI internally with putting it all into your own vector database and doing some of those AI strategies or building agents. So that whole data side of things is a dependency on really leveraging AI, and it's probably not something that's at the center of the discussion, but it should be, and again, that data, the more real time that data is, the better decision making you can have. So if you've got a data lake and the data is being centralized, but it's coming out of your core systems that are legacy, they'll be at the end of day, they're not real time. So it's not, as of the minute position, it's a position from 24 hours ago or 12 hours ago, 6 hours ago. And if you're making decision on moving lots of money around to improve liquidity in your bank, you can't make those as efficiently as if that data was real time. Or for the customer, if they don't see that, if they don't have that real time balance position, they can't do certain things. So yeah, data is a big dependency, and the accuracy and more the as real time as the data can be, that is a dependency on effective leverage of AI.
Listen, man, garbage in, garbage out, right? Like
100%.
Yeah, like data, like everybody's talking about AI. Data's the gold, right? Like that's once again, it's a tool, but the underlying thing that it needs is great data. I mean, the reason we all love ChatGPT is because it took the data of the world, right? And it's like, all right, I'm pulling whatever I need from this. So you don't have to read 15,000 books, right? I have all that data. Just tell me what you need. Now I'm leveraging 100%. All of the brain power from 1,000 years, and I'm giving it to you in a simple paragraph, right? So that's the beauty, right? From what you've seen working with the incumbents of these legacy banks, is there a project where you solve that? And can you describe it?
I think pretty much every bank that we work with has a project around creating cleaner, more centralized repository of data. So there is an ongoing project in almost every bank around that, and I think that's it's a really complicated space because you're talking about different systems. So just to give you a sense, like right now, the average financial institution has about 15 to 20 critical systems that are integrated to provide their offering to a customer. Card management, KYC, fraud, AML, transaction monitoring, core banking. They might have multiple core banking systems. Each one of these systems are probably from a different vendor or a different provider, and they're all integrated inside the bank to offer, the products out into the customer. So the data from all of these systems needs to somehow find its way into a structured environment or a data lake that can be then leveraged to be used by AI, right? So think about integrating 15 different systems data, and those systems are constantly being upgraded. So the format of this data is changing. You need to have a kind of model for that data. So there's a couple out there. There's things like Buy-in, which is a data model for banking. So you need to have it's an ongoing project to make sure that the data that you're that's being created out of the bank running is organized and can be leveraged. But that's today. As banks become more composable, there's more granular capabilities coming in. That number of 15 to 20 critical systems integration. I read a report recently, and it's part of our actual sales collateral, is that the average bank within 3 to 5 years is going to have up to 100 critical systems integrations because of the way in which banks are being more composable. So that whole landscape of data feeds that need to come into an organized data lake, a data store that can be leveraged, is becoming more and more complex all the time. And this is private data within the bank. So it's not something that you can throw at an open provider like ChatGPT. This is something the bank needs to bring AI into their world to learn from that data and train their own data and augment the data of the outside world with their private data to then have that differentiator that they can offer customers. It's that combination of the two. So imagine an agent working on your behalf that's realizing what's happening in the market because of whatever, has outside intelligence and reasoning, has reasoning around the bank's data and internal data, and then can make next best decision for you, whatever that may be. That's the competitive edge that good data and AI can bring a bank. But Yeah, it's an ongoing project. It's not something that you can't point to one project. I think every bank has that project, and it's getting larger and more complex. So I think there's an opportunity for technology providers to provide better tooling around how do you get that data more organized, more synchronized. All the technology around managing data and working with data. There's opportunity there for better tools, and there's some great products out there. The cloud providers have all got, Databricks is out there, Azure Synapse. So there's some good products out there, but that's a space for that's going to have demand and probably a lot of growth as AI gets more and more embedded in banking.
I had a show on that a few months ago. I don't want to do it in justice. I have different shows. I don't want to butcher the person's name. But what we did talk about, right? The power of what you just said. Now imagine taking non-digitized data from a bank that's been around for 100 years, getting the digitized data, getting the non-digitized data. You have that that's your proprietary info now,
100%.
right? So now the decisions you're making, you're leveraging, you're leveraging data from 50 to 100 years ago, but you're combining it in with like you said, the outside world and this AI tool to really make excellent decisions, to really get pattern recognition, really understand different things, right? And that's your competitive edge. Mastering that.
Absolutely.
It's dude, this is I love this discussion, man. Like really, I really had fun talking with you about it and just going back and forth. It's really cool. I want to before we
likewise
before we get off, I want to ask you a question because I brought it up in conversation. How do you see agentic AI playing into the day-to-day operations of banks in the future?
I think that you're going to start being able to create efficiencies that you wouldn't have been able to do because of this reasoning capability. You can start running a much leaner operational team inside a bank because you can have these agents programmed to do certain things like manage cases, fraud cases that come into the bank to understand, what best next action to take, understand reconciliation processes, understand investment processes, credit scoring, all of these kind of things that typically have to happen behind the scenes inside a bank in order for them to offer their services. Those things will be hugely assisted by agentic AI inside the bank. So you're going to see much leaner operational teams being able to be much more effective than exists today. I think that's inside the bank, and then outside the bank with services that they offer to customers. I think banks will be able to offer the agentic AI capabilities to merchants that they work with, to businesses that bank with them, in the corporate banking space, in the investment space. So there's tools that can be AI powered that they can offer to their customers that can help differentiate them. So I think agentic AI is going to make banks much more. It's an efficiency play inside the bank. And it's a differentiator for the products that they can offer their customers. I think you're going to see a lot leaner banking operations. You're going to see a lot more innovative products coming out into the market, especially in the more the small medium business banking and the investment banking, corporate banking space, wholesale banking, traditional, like those areas, more so than retail banking necessarily, because I think that's where it can be leveraged the most. With the retail banking experience, that hyper personalization is kind of where it ends. So I think there's a lot of opportunity there, and you can get customers to be more engaged with your product. But I don't think there's that much more that you can leverage out of that. I think there's a lot more that you can leverage internally inside the bank's efficiencies and that kind of thing.
I want to end the last set of questions with more advice, not for banks in general, but the employees of banks. as we start talking about leaner operations, that means we're not going to need as much people. That's just an obvious fact, right? I want to get your take. Two pieces of advice. One for the technologist that's currently working at a bank, and one for someone on the business end. What should they do to start pivoting so they could be a part of the new wave that's coming out versus getting lost in the being redundant?
Yeah. It's a tricky situation. I'm a software engineer, so I see it firsthand with, we have a big software capability internally in our business, and just the what you can get out of Copilot, GitHub Copilot, and Cursor, and these amazing software code generating tools that you literally have a programming assistant working with you, or a team of programming assistants that are writing code for you. You're much more of a human in the loop in the code process as opposed to the coder themselves. And I think the same extends to the banking space, where instead of doing the banking operations yourself, you're going to be kind of checking and providing additional context and maybe quality control and those kind of things. So I think that the way to kind of remain relevant in this shift is to kind of start using those tools as much as you can, and seeing where their limitations are. Because I think that I'm drawing parallels to software engineering now, but I think that I think we're going to need more developers than less developers, to be honest, and we're probably going to need more bankers than we think we need. So, but it's going to take some time to get there, because the way in which software is written is going to change, and the way in which banking is delivered is going to change because of this. So I think in the short term, you're probably going to see this, what I'm describing now as an efficiency in the same way that code is being delivered more efficiently, banking operations will be delivered more efficiently. But there's a light at the end of that tunnel, is that in that, software engineering is going to change and banking is going to change, and in that will lie this opportunity for people to be influential still in that movie, as opposed to being sort of redundant, if you can think about it like that. So I think the key is to kind of embrace the tools, to understand them as, and where they can get to, and that where they end and humans really add value. Like find that sweet spot, so that when the overall industry has its new dawn, of software engineering and financial services and banking, you're able to leverage the tools as effectively as possible. So yeah, it's a bit of a warm and fuzzy answer, but I think there's light at the end of the tunnel. I think it's going to be a tough ride for the next couple of years, in general across many industries because of AI. But yeah, I mean, I'm a musician by trade, or not by trade, by fun. You can see there's a piano behind me, and the music industry was definitely one to be disrupted by technology. There's a band now that I think it's what's it called? I don't know, you must go check it out. But it's a purely AI band that's released 3 albums in 3 weeks, which is humanly impossible, and it's garnered, I don't know, 750,000 subscribers on Spotify. But the band, there is no band. It's AI that's generating this music, and so that's quite scary for musicians. Like where's that going to leave the musician? So I think it's going to be across industries an interesting ride for the next couple of years. But on the other side of that, we'll find out where our sweet spot is as humans in this AI era.
I think that's a really good way to end it. Sergio, what we do at the end of the show is I'm going to give you the platform to talk about how people can find you, could talk about your ventures at FutureBank and Global Kinetic, and then I'll come back and close the show out with you.
Okay, cool. Thank you. All right. So for those out there watching, Global Kinetic is a software engineering firm that provides consulting services to financial institutions around software engineering specifically, and integrations, app development, strategy. And FutureBank is our platform that helps integrate different systems of record inside a bank. So across banking and payments, our vision is to be the only 100% plug and play banking and payments platform in the world. You can plug any core, any banking system, any KYC solution, any loyalty platform into FutureBank to create your holistic offering, including AI tools. And so those are our two businesses. Global Kinetic is South African business, but we do business around the world. And FutureBank is an American Delaware business. We sell our platform into banks across the US, Middle East, Africa, and we're looking for a future where banking and payments is 100% plug and play, trying to remove the dependency on legacy systems, making banks more nimble and financial institutions more nimble. So that's really our sweet spot. You can have a look at our websites, globalkinetic.com and getfuturebank.com. There's lots of information there about the services that we offer and our platform and our professional services. Yeah, we'd love to hear about your needs if you're a bank or a financial institution or a fintech that's looking to launch a product into the market. And that's probably all I've got. I don't know if there's any other info that I should share. Is that good enough? I think that's
perfect.
Probably,
that's how people can find you. If they go to the website, they can find a company. So that's a courtesy we give to all our guests. Sergio, it's
Thanks so much.
A wonderful show. I really enjoyed this conversation. I think you had me when you talked about 2002 because I literally remembered exactly which bank I was in and what I was doing at that time, and that was like early on in my career. So when you were talking, it brought back a lot of memories, and it's so funny because at the time it was like you're doing all this work and you're taking company cars home at like 11, 12 at night. But looking back, it wasn't as bad. It was some of those projects were torturous, but now looking back at it, I could smile and be happy for the experience for sure.
Awesome. Yeah, that were good times. Some good times ahead still. I think we're in a good space with technology at the moment. It's definitely exciting times.
That's always awesome stuff. Listen, Sergio, I'm definitely going to be in touch with you. I like making new contacts during this show. And awesome. To everyone watching us, really, thank you very much for watching and being a part of it. We really enjoy your viewership, all the messages behind the scenes and so forth. Whether you watch this episode today live or you're watching it tomorrow next year, we appreciate your viewership. Also, Tech Behind FinTech, we have a free newsletter. I'm going to put it on the screen right now. You could find it at Tech Behind FinTech. You'll be able to keep your finger on the pulse of FinTech, and also you'll get an update on our upcoming guests and so forth. So definitely go to Tech Behind FinTech /subscribe. Subscribe to the newsletter. It comes out every single week. And it's definitely, nothing to lose. Subscribe, everything to gain. If you're into FinTech, definitely subscribe.
Do it now.
Yeah, do it now. Let's do it again. Do it now. Hit the button now at the bottom of the screen.
There
we go. Hey, Sergio, man, look, I'm definitely going to. Oh, so we have a comment. Lesson Road. Thanks for the show. Thank you for watching. Appreciate you. Yeah, man. So listen, you're now a friend of the show officially, man. I had so much of a good time with you. In the future we have a topic or you want to suggest one, circle back and we'll do it again. And on that note, man, have a great weekend. Enjoy your glass of
and you.
About to drink. Thank you very much. I appreciate it.
Take it easy. Cheers, Navdi.
Cheers.
Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.